G'day there. Welcome to the Closing Bell, recording it on the 18th of August, and a bit of selling about, isn't there? I've been sort of taking you through a few things over the last few weeks, showing you how the S&P was sort of in a bit of a danger zone and could start turning back down. So to kick off, before we sort of really get into what's going on, I just wanted to show you something I sent you in May, and just to outline the scenario that I saw could unfold, and we'll just compare it to what's going on at the moment. So this is a weekly of the S&P 500, and this is from, back in May, the 20th of May. You can see down there, this was a closing bell that I sent out, and we were looking at price action at the time. It was trying to rally, and I was saying, above this 43.50 zone was where it could spike, but then I sort of gave you a scenario of what could play out. So let's have a listen. Above 43.50, well, watch out. It could actually just spike up into that sell zone. So you're looking at, a few 100-point rally. But be wary that that could be the real dummy bull trap, and then we could be heading off down again if growth really does get hammered. So there's still more hurdles to overcome. Okay, so you can see there that when I was looking at price action, expecting that it could break out and have the rally, which we have seen in the last few months, but there was a danger zone, that sell zone, which we'll have a look at right now. So this is the same chart, but updated to right now, as I'm recording this, where it's at. And you can see that when I was discussing this, 20th of May was around here, that I did that recording, saying, it can break out. There was short covering that would happen if it broke out above that 43.50 area, which was, just to recap, just for people who may want to understand what's going on. If we're looking at this correction that we've seen in the S&P 500 last year, so that was an all-time high here. And then you've got the waves on the way down, right? First wave down, correction, next wave down, correction, next wave down. So this area was a major point, basically, because it's the lowest high in that down wave structure. So if that breaks, that actually can be the beginning of the uptrend. So often you will see prices have a good move above that level, giving you the sense that things are turning around. But I was saying to you at the time that we may see that. So we may see the breakout, which would cause buying to go up into the sell zone of the whole correction. So that is a 75 to 87.5% retracement. So basically what that's doing is cutting that whole range in half. So there's your point of control, the midpoint, which is what prices are oscillating around. Think of that as a gravitational point. Prices are rotating around. And then I split that in half again. That's the 25%. And then split that in half again. And that's that 12.5%. And same on the top side. Split that in half. 75%, split that in half, it's the 87.5%, and that's the sell zone of the whole correction. And so I was saying to you that is the area where you've got to watch out, because things can turn back down from there. There's just a higher probability of seeing a reversal in that area and a move back to the point of control, which is that gravitational point that I'm telling you about. And you can see how things have panned out. a few weeks ago, if you've been watching this, when it was right here, I was saying to you, well, this is the danger spot. This is a spot where the music can stop, right at the top of the sell zone of that whole wave down. And what that's done, it's shaken out lots of the shorts. So people who have been getting short all through here over the last year, fund managers dumping longs, just lowering their exposure, worried about more downside. Once it breaks out and starts rallying, a lot of those people are out of the money, aren't they? Because a lot of the trading is going on, or has gone on, down here. Right? So there's a lot of short positions being put on down here. So when it's breaking out and heading, up through the point of control, that is causing a lot of short covering, and also fund managers who are aren't exposed sort of get their hands forced and they start buying as well. So it's a bit of a self-fulfilling, carries on to the upside until it meets the bigger picture selling. And the bigger picture selling is coming in, as I've said, usually around that sell zone of the whole correction. So that's sort of that final point where, is there selling pressure here? And the answer seems to be yes at the moment. I told you a few weeks ago we had the weekly sell pivot, therefore expect more downside, and I needed to see a weekly buy pivot before I'd get bulled up again. And we're seeing a continuation. So we're now starting to see this down move continue, right? Where we've got the sell pivot there, a weekly close below that, first key bar, that was last week, and this week is second key bar. So we're starting to see things marching down, aren't we? But it is in the weekly uptrend, okay? So we're watching these trends. We got the weekly trend there, the 10-week exponential, 20-week simple, all sort of down, down, down. We've had the turn. The weekly trend is up. That has been carrying on quite nicely. And here we are sort of selling off towards what should be buying pressure. And the thing that I guess I'd point out is this is sort of the moment when it can surprise to the downside, because we have had this big correction, a long-term rally, which is nearly a year, right, up into that selling pressure. Now, there's a lot of people who would have been long and wrong and scared as hell when it was selling off down here. So here we are up, giving you a second chance to dump. And if the momentum turns down, and remember there's been a lot of short covering going on. So a lot of this buying was people covering short positions. So those short positions are gone. If they then decide to put them back on, the short selling will have to come in to add to those positions. And it's just a moment when people can be sort of caught off guard, I guess, where people have become bullish, thinking things are looking okay, thinking we're near the all-time high and it's about to break out. So all the articles out there saying everything's fine. And all of a sudden it's not. And the memory of this correction comes back in quite quickly. So it can actually surprise to the downside here. You need to see the weekly trend shift to really start getting a bit more concerned that the momentum is turning down for the moment. So we're not at that point yet. So we may still see, rallies. This markets never move in a straight line, do they? But the way things are looking is that my expectation that there would be selling in this area is starting to prove correct, isn't it? So with that said, initially expecting a move back to that point of control. There's your midpoint. So that's an initial target down around, I'll give you the exact level, 41.50. And look, prices could sell off to there and bounce, couldn't they? I'm open to that because the monthly trend is starting to look like it's possibly shifting. So that's a possibility. The point of control is the high probability outcome. Beyond there, making big statements about what's going to happen is harder. Usually the way I trade is to take the easy money. So if I'm looking at capturing that move, I'd capture the move from that area once things are turning down and aim to capture the move to the point of control where I'd take part profit and then basically create a free option to see what comes next. So if I was short, where I make money if it goes down, I'd be buying back, let's say, a third of my position there, probably a bit earlier, but also there, because that's where the odds of prices bouncing or selling off sort of heads back closer to 50%. So that's where you want to lower your risk. That's the bit that you want to capture. And then from there, if you've taken the part profit, then you can see, well, let's see what happens. Maybe things will collapse again. We don't know for certain. Now we're 2 years into the correction, expecting we're getting closer to the end than the beginning, but doesn't mean it's not going to have another wave down before it's ready to turn up. So just thinking really big picture on this, let's really go back and look at what's going on here to understand it at a deeper level. Here is the 2020 crash low. There is the high of that rally. So we're looking at a bigger move. We've got the rally. We've got the correction last year came to where? The point of control. Exactly. Then we've got this rally to the upside. And this is the area why the rally, really did take off. That's the sell zone of that whole rally to the upside. That's the area where I expect to see things possibly turn down. And you can see that prices did struggle there initially, but ended up breaking to the upside and, getting above the top of that sell zone. So it was a really strong rally. And then we've got the turning down here saying, well, this is an area where, well, watch out. So if I'm looking at this really big picture and this thing really does get going, well, I could go all the way back to that point of control. That is possible. And that's the bottom of that correction. Below there, well, that's where you start getting targets down to the buy zone of the whole move. So that is a possibility if this really gets going, but that's a story for, maybe next year, depending on how growth is going. But down there, I'd be a pretty keen buyer if we saw things turn back up. If we saw it move like that, that's pretty huge. That would be down to what, 2,800? We're at 4,500. So, that's a massive sell-off. But, we're in a situation, interest rates now actually going up. The 10 years in the US at the highest levels we've seen. Fears that there's more interest rate rises to come. Philly Fed index looking strong. Data out of the US actually strong. China lowering rates because their property market falling over. There's problems afoot there. Are they selling US treasuries to support the yuan? There's a bit of news about. And, it is at this top of the sell zone of the whole rally from 2020 to 2021. We've had the correction for the rally back again, and now we're turning down. This is a spot you've got to be wary of because no one really expects it, and it can surprise to the downside. It's just one of those moments that my model picks up, which most other traders don't really see or understand. So early days, the weekly trend still up. Let's continue to watch and see what's happening. But again, back under that 43.50, and it's just a point when you are considering the fact that it can roll over a bit more, and you just want to be prepared for that outcome. And that's what I've been discussing with you for quite a while. And look, there's going to be some brilliant opportunities, in this next year or so. There's no doubt about that. It's just, how does this play out? If we look at the monthly on this just quickly, here's the monthly, wonderful, big, strong uptrend, isn't it? For this past decade. The monthly trend has turned up slightly, but that can be a bit of a dummy. We got a little dummy here of a downtrend, sort of looked like a downtrend, then turned back up and off it went again to the upside. But when it does turn up, often it's been a pretty good signal of more upside. So, while that monthly trend is up, I'm prepared for it to sell off and then find the buying again. And really new all-time high and away it goes. Can look fantastic. So I'm open to all possibilities, but just want to note that very big picture idea of the fact that we've had the rally, the move back to the point of control, into the sell zone. Is the selling pressure there? Yes. Well, just be aware that this is the sort of thing that can happen. And if you're looking at very long-term trends, that would sort of be in line, wouldn't it? The big sell-off down to that very long-term support and could then be great buying. But just, yes, note that where it's going right now, if we just look up close on this, you should note that the selling that we're seeing right now is potentially creating that monthly sell pivot in that zone, right? So there's your high. A monthly close below that low is just a little dangerous. So that low is 44.11, price is at 43.85. So the selling pressure really coming out once it broke below that low. And the end of this month, another couple of weeks, if the selling comes out, I mean, it could actually have quite a bad down bar this month because of that momentum shift back down where you've had that sell-off reaction and then sell-off again. The selling pressure can really come out of the woodwork quite quickly. So I'm just wary of that right now. So just quickly on the ASX, here is the monthly on the ASX 200. Here is the 2007 high. I've got that across there. Very important point for the market. This is the rally before 2020 crash. False break of that high, big sell-off. And we've broken again, rallied, trying to get away from that point. But really, it hasn't, has it? Really, how I see all this price action here is work done around that old high in 2007. So it's trying to break away, but it's failing to do so at the moment, isn't it? And if we go up close, and what we're thinking of is, false breaks occur. What happens when a false break occurs is that momentum, here we go, tries to rally, momentum turns down. Okay, it was a 2020 crash, but that gives you a sense of what happens with false breaks. It's done lots of work here. It's rallied over the last year, but again, if I show you up close what really is going on, is that we've seen lots of work done in the sell zone of that correction. So here's your sell zone there of that correction last year, and lots of work done, lots of selling pressure. So that could be big picture selling just sitting on the market. We've got the monthly sell pivot there a few months ago saying there's potential this is turning down. Okay, it's sold off back to that point of control once again, which is the midpoint of that correction. So that's a very important point. Then we got that rally over the last month back to the selling pressure again. And here we are turning down once again. So the question is for us, the ASX, what happens once prices fail through that midpoint of the range, which is just a bit lower than where we are now. It's been support for this year. Below there, I'd expect pretty stiff selling pressure in the short term. So that could bring the ASX down to around 64 to 6,600, and that might be it. And boom, off it goes. Again, 2 years into this sell-off, so getting closer to the point when it'll finish. But there could be more downside. And very big picture, looking at this, here's that 2007 high, failing through that point of control, which is, very close to that 2007 high. That's sort of the false break of that. Okay, we might be okay there, but if we break below last year's low, that's when you bring in the biggest selling pressure can happen. And from there, I'm looking at the buy zone of that whole wave higher from 2020 to 2022. And down there, boy, I'll be getting pretty excited that it's all over and it's time to really step up and start buying the market, because that would be in line with the very long-term trends. If we're looking back decades and just looking at a line of best fit of how our market is trending higher, a move down like that, hitting that supporting trend in the past has been a pretty good spot to be buying stocks, hasn't it? So that's how things could play out. So just want you to be aware of that. And yes, preparing yourself that if it does crack further to the downside, it can just surprise to the downside in the short term. All right, that's enough for today, I think. It's a pretty big one. I shall come back with more next week.